Welcome to Barchart's educational webinar series. Today's session is about using the insider trading activity and discovering trading opportunities. Insider trading filings offer a wealth of information, but understanding how to extract the valuable information is essential and key to our seminar. Not all transactions are created equal, and it's essential to decipher between informative and non-informative transactions. By analyzing the timing, the magnitude, and the context of trades, we can discover potential trading opportunities. Whether it's a CEO selling a portion of their holdings for diversification purposes, or a group of executives purchasing shares together, each transaction has its own merit and can signal insider confidence or concerns regarding the company's future. Now, we're going to explore how to identify and interpret patterns, clusters, and size of insiders' transaction using Barchart's insider trading activity page to help spot opportunities or anticipated market movements. Now, equipped with this information, then we'll determine the proper course of action and trading strategy. Hello, everyone. My name is John Rowland, your host and Barchart Senior Market Strategist. And my objective today is to show you how to navigate Barchart's insider trading activity page to learn how to read between the lines, interpret what could be significant and what can be actionable. In addition, we'll look at a few examples of strategies that could be appropriate for the market conditions and insider activity. Now, before we get to all of that, please welcome our moderator and my partner, Barchart's Project Director, Gene Baker. Hello, Gene.
Good afternoon, John. How are you today? Great Wednesday, huh?
Yeah, hump day. I'm in a good mood.
Hump day. So insider trading, a lot of people are buzzing about it every now and then when there is some big insider trade. So I'm sure you're going to give us all sorts of information on how to interpret that and figure out what to do with the information, right?
Yeah, for sure. You know, not everything is actionable, but certainly if we can find the right clues, I think you can definitely get some nice information from our insider trading activity page.
Absolutely. All right.
All right, you ready to get started?
Yeah, go full steam ahead, John.
Thanks, Gene. All right, just a reminder, today's session is for educational purposes only, and decisions to buy, sell, hold, or trade securities, commodities, or any other investments involve risks and are best made on the advice of a qualified financial professional. And under no circumstances shall we be liable for any loss or damages that you or anyone incurs as a result of any trading or investment activity that you or anyone engages in based on information or material you receive through barchart.com and our services. Okay, so what are we looking at, or where are we going to start our process? So what exactly will we be looking at in terms of insider trading activity? So under our investment segment, we have a page called insider trading activity. Now, first of all, the insider trading activity page is a list of filings required by the SEC. Now, they are disclosing the transactions of individuals who are in beneficial ownership of securities. That's how the SEC defines it. Now, these include individuals who have more than 10% ownership or are a director or an officer of a company. Now, filing requirements for our insiders, our directors or officers, and certain large shareholders who conduct transactions in the company, the securities that they buy or sell needs to be reported within 2 business days after the transaction. So that is something that we need to understand. When you're looking at some of this material, you're actually seeing it at post trade. So it's important that you understand that this is not something that's happening instantaneously. Another filing requirement is any person or group who has acquired more than 5% ownership of a class of equity shares. And certain institutional investors who acquire more than 5% ownership of an equity without exerting any control or influence over the companies. And these would be like wealth funds or pension funds would be fall in that category. Now, what this page is not is any illegal activity. Instead, this is just the required disclosures set forth by the SEC. Now, we're going to look at a variety of different types of transactions. And what we're going to look for is, are these transactions informative or are they non-informative? So, for instance, an informative transaction would be somebody who's outright purchase or sale. And these discretionary types of transactions might give us an indication of our insiders' expectations and future market price movement. Now, non-informative transactions, which are more common and are conducted for maybe personal reasons or are related to the normal compensation of corporate executives. But what could give us some value of non-informative transactions is the action, the timing, the cluster, or the size of these trades post-trade. In other words, we might see a group of C-suite officers who were awarded or exercised an option and immediately sell the corresponding shares. That could be a significant piece of information. So if you have any questions about what the different types of transactions are, and there are many different types of transactions, up here under the help button, we scroll down, you can see the different types of transactions. Now we're going to pay particular attention to the buys and sales. Those will be our informative transactions. But we also will look at those non-informative ones, and those would be our exercises, our subscriptions, and our awards. And then what we want to see is what happens after one of these non-informative transactions, one of these basic compensations that our executives will get. So we're going to have some key elements we're going to look for when we look at these different types of transactions. And there's going to be 4 key elements that we're going to look at, or conditions we want to be aware of. The first one is we're going to look at large transactions. Now, a large transaction could be in the size of shares, a number of shares, or it could be a percentage of buys or sales that are insider controls prior and post transaction. Now, if I have, let's say, a CEO who has buys 10,000 shares, but they already control, let's say, 1 million shares, maybe that is not as significant. But let's say a CEO that holds 1 billion shares and sells 300,000 shares, well, that would be a lot more significant in terms of percentage. Now, we're also going to look at large transactions in terms of a dollar value. And again, this could be very relatable. I'm going to show you two examples. One where it is a large dollar value that has very little significance in terms of insider trading. And then another one where an officer purchased very small dollar value of a trade, but maybe would be a lot more impactful in terms of deciphering this insider activity. We're going to look at patterns over periods of times, quarterly, monthly, or over the last year. But more importantly, what we want to do is we want to look for this consistency of buying or selling over these time periods. And what did the stock price do after the last period? Right? Is the activity influencing the price? We're going to look for cluster of trades when a number of corporate executives simultaneously buy or sell within a short period of time of each other. This could be an indication of a collective insider knowledge or a coordinated effort. And finally, we're going to look at all insider activity across multiple equities and sectors. And this might give us an insight to what corporate executives think of or believe the business climate is, or where the business cycle might be heading. Again, more of a broader base sentiment. So let's start with that. So here is our insider page. And right here on the top, you'll notice that you'll see this kind of color coordinated grid. Red bars meaning sales, insider sales, and green bars meaning insider buying. And so if we can look at the transactions for the last 60 days, there seems to be abundance of selling. So in terms of that sentiment, insiders here believe that it's a good time to sell, that prices are high, or maybe bad times are ahead. Now, we can manipulate this little graph. We can look at sizes of transactions. Again, we might look for just very large transactions, or we could look at types of transactions, in this case, buys or sells. The other thing we can do is we can click on any one of these bars, and then that will take us to the trades that occurred on that particular day, the insider trading activity. Now, what I think is kind of interesting is there is a large amount of insider selling on this date, June 12th. Well, what was June 12th? Well, that was the Monday before the Fed. So even insiders were concerned, or maybe being cautious about what the Fed was going to do last week. So many of them were actually selling into the market. And if you look at, the corporates activity in terms of the different types of corporations, you get a nice mixed bag here. So it wasn't like just one sector; it was, across multiple equity markets. The next part where we can use our insider activity page is the highest number of trades over the last 60 days. Think about this in terms of looking at a cluster of trades and our highest trades in value. Again, that's large transaction concept. So let's move through that process. So here we can see we're looking at symbol team, which is was that at lesson. And there is 84 transactions that occurred in the last 60 days, and all of them were sells. So I can click on the symbol, and it'll take me to that specific symbols page to where we call our insider trades tab. And you can see the activity that is based on this particular security. Now, what I notice on the top right here is we have an opportunity to look at what has happened over the last 3 months, the last 6 months, and the last 12 months, the number of buys versus sales, and the number of collective accumulation of shares that were traded. Now, for this particular stock, you can see that there's been no buying activity and only selling activity. That might be a warning sign to me. Now, if I look at the actual trades broken down, what I find is a curiosity here is that there has been a lot of active trading, but the size of the shares that are being sold looks like it is a very consistent number. Now, this might be a corporate governance or a restriction set by this corporation that says that insiders or corporate officers can sell shares, but they can only sell a certain amount of shares at a time. And it looks like it's about 8,241 shares. Now it does go, I go back in time here, is, you have 8,600 shares as well. And you can see that there are really two really main players here. I mean, both of them are the CEOs, looks like co-CEOs, Mr. Brooks and Mr. Farquhar. And what do we see is that they're literally selling every day since, well, we can go all the way back to April, that minimum amount of shares. So what is this is telling us? Well, this is not giving me a lot of confidence in this stock. I don't know what the stock price is doing. We'll look at that in a second. But this certainly doesn't give me confidence that they are continuing to sell, every day. Now, in terms of actionable activity as a trade and opportunity, does 8,600 shares mean something to this stock? Is that a lot of shares? Probably not. If we look at our overall here, this is a stock that trades on average 2 million shares. Is 8,600 shares going to do anything to that stock? Probably not. But the fact that these two corporate insiders have been continuing selling for the last 6 months or last year, that doesn't give me a lot of confidence in that company. So maybe there's the actionable trade is no trade at all. If I'm not going to invest in this company until I see some maybe some buying insider buying activity, or because I know that these these insiders are continuing to sell, maybe what I could do is look at some options or maybe sell some upside calls in this particular stock. But let's go back to talk about importance of evaluating the size of the shares versus how many shares these insiders hold. Now, again, in terms of the percentage these insiders hold, it's a very small percentage of all the shares outstanding. And in terms of in each individual transaction, 8,600 versus, owning, 400,000 shares, that is a very small. But what is kind of interesting is during this 6-month period, now these two individuals have gotten themselves down to where they only own, 74,000 shares. So now, 8,200 does become a little bit more significant. They're selling 10% of their holdings at a clip. But again, in terms of overall shares, not very significant. What would be interesting in this one is what would happen when they get down to, let's say, their last 20,000 or 10,000 shares. Will they continue to sell until they liquidated their position? And then what would happen, from there? Maybe we might see a regime change in this particular stock. So let's look at in terms of size of share, size of trade. And here we can see the highest value trade over the last 60 days is in AGL, and that looks like almost a $2 billion trade. Again, I can click on the symbol and it'll take me to all the insider activity. And you can see that, pretty much this has been a quiet stock, not a lot of insider activity. But, of recent, we have an American shareholder. Now, let's pause there for a second. An American shareholder can be an individual or a corporation, or, like I said to you, like a hedge fund, or excuse me, a wealth fund, or, maybe a pension fund. And what do we see? Well, back on May 18th, they sold 94,000 shares. Now, that is very significant, right? That's a lot of shares, especially if we look at, how many shares this, stock trades, on a daily basis. Not only that, but in terms of the number of shares that they sold, in terms of their holdings prior to and then post, here you can see that, they only had 100 million shares left afterwards. So what did? They have their position. So is this a good sign to this stock? Probably not. That a large, institutional trader is liquidating their position, and they liquidated half of the position in just one jump. And if we look at the price of this stock, since May, we can see that prices have been falling. So this might be a bad indication moving forward, especially if this large shareholder continues to liquidate their position. Now, what I do see in the last day or so, or June 15th, we have the CMO exercise an option, 37,500 shares, and that represented almost, about half of their holdings. And then they immediately sold those shares out. So again, not a lot of confidence in this trade. Now, how could we use this? Well, again, maybe start to sell some covered calls or looking for some options, short options strategies. Now, what can happen with a lot of these stocks is when we start looking at insider activity, here we see that this stock, in terms of the options activity and outstanding shares, outstanding open interest, have with a limited amount of options activity. So this might not be a great candidate, right? So we have this information, we could do something about it, but is this stock in terms of options tradable? Probably not enough liquidity for somebody who wants to be able to manage risk. But certainly some trades could be designed based on the price action. All right, so let's look at today, and this is for today's trading activity. And again, what do we see here? Well, the transaction we see is a subscribe. This is a non-informative transaction. This is somebody who has permission or has a right to subscribe to buy a certain amount of shares at a certain price. And, that could be a positive in this case, but, this might be just part of some kind of compensation or, a payback for loaning this company money. We don't know that for a fact. But what makes this more significant? Well, it's 4,700,000 shares at a price of $22, and that transaction was over $100 million. I think we can argue that that is a large amount of shares and also a large transaction value. Now, what do we see here in terms of shares afterwards? Well, those 44.7 million shares, now this large American shareholder has 13.9 million shares. So in other words, this is a 50% increase of their holdings. And again, another stock that has been quiet for in terms of insider activity for the last 12 months, 6 months, or 3 months, but this shareholder now has increased their shares and now controls close to 25% of this company. This would definitely be a bullish indication. Now, what is the stock doing? Well, the stock price looks like it's about to break out in terms of a price action. So this is definitely a bullish indication, and also the market or the stock is responding favorably. So again, what could we do with this information? Well, we could buy the stock and ride the coattails of this shareholder, or maybe we could look for some options trades, some long options trades. Again, one of the things we might want to have to do is look at the options volume, and again, this is one of the dilemmas of what we're going to discover in a lot of this insider activity is that there's not a lot of options activity for us to trade off. So in this scenario, the only real option, no pun intended, would be for us to buy the shares and follow the coattails. Now, personally, as a trader, I'm not a big fan of buying into a stock today that is already up 3.8%. Maybe I would wait for a pullback or a greater confirmation in terms of recent highs or monthly highs. And certainly if we look at this in terms of a weekly, right, I would be more inclined to be favorably looking for a buying opportunity once price broke above $32, or when price corrects back to where our American shareholder bought around $22. Right, so we looked at a couple of different examples in terms of a little bit of the sentiment, a little bit of clusters, and a little bit of large trading activity. So let's do this. Let's go back to size in terms of relatives. And I want to show you two different examples. So the first example I want to show you is in Walmart. And so I've gone to the Walmart page, and down here it's under insider trading activity. And what can we see? Well, we talk about size, right? We talk about in terms of shares and total value. Well, what did we see here? Well, this is, our insider trader here is S. Walton, and I'm assuming that's Sam Walton, right? Is that not the owner or founder of Walmart? I'm not sure. I'm not 100%. But what do we see here? Well, we see that, since June, Mr. Walton has sold a significant number of shares, 700,000, 170,000, 200,000, 200,000, 1.3 million. Now, could that be an indication that Mr. Walton doesn't have faith in Walmart? I don't think so, right? We look at this in terms of the number of shares that he owns after one of these transactions. 1.2 billion shares, right? This might be something where, I know this might be difficult for, us mere mortals. Maybe Mr. Walton's just selling some shares because he needs some pocket money. He's collecting, getting taking a little bit of profit out of the market, especially when we look at this in the context of his percentage, right? His percentage of holdings of these transactions is very, very minuscule. In other words, not very insightful or informative, even though this is selling. Now, what we could do is look at what is happening to the price of the stock as Mr. Walton is selling. Now, on the first or second wave of selling orders, we could say, oh, well, that would be maybe a potential influence of price. But you can see that, he sold around 150, and then again, he sold at 156 and 155. So his activity really didn't have much effect on the market, even though if we look at Walmart's average daily volumes of 6.2 million shares, that, representing a larger chunk of daily volume, you would think that that would have more of an effect. But we can see that it really doesn't. What would be more insightful or what would be more informative? Well, in this case, maybe if Mr. Walton was selling a large percentage of his holdings, 5%, 10%, that would be more significant in terms of actionable trade. So here we have a large trade that really doesn't give us a tradable, actionable trade. Now, what we could do is look at other times when Mr. Walton is selling. Again, here we can see, he had a cluster of selling over, looks like a 1 week period where he sold, several million shares and generated, multiple hundreds of millions of dollars. But did it change his overall percentage that he owns? Not really, right? And if we look at our chart back in March, right, the market actually shook this off. So again, here's a large transaction, which does not give us a lot of actionable information. But let's go to the other side of this story in terms of evaluating size compared to a relative basis. So I'm going to go back to the 16th and I'm going to look at trades. We've looked at a lot of sells. Let's look at some buys. And let's see if I can find it. I need to go one more, I think. And here it is. Enzo Pharmaceuticals and Chairman Randolph Reed bought 99,550 shares, right? I think that we could say that that could be a significant amount of shares. Now let's look at it in context. Well, what was the price of the stock? Well, the stock here is a 13-cent stock or a 14-cent stock. This is a penny stock, right? A penny stock. But Mr. Reed, from the moment that he bought the shares, now has doubled his shares afterwards. So is that significant in context? Yeah, I think this is very significant in context. Now, in terms of the transactional value, it's only a $13,000 trade, right? That's not, that's not a lot of money. But the fact that he doubled his position. Now, what I think is interesting is, let's go to the details on this one. And what we can see is here's where Mr. Reed bought on the 16th. And he hasn't been active for a long period of time. Matter of fact, you have to go back to, I think it is November. Oh, here it is, November of 2020, where he bought 100,000 shares at around 15 cents. Now, what is interesting here is if we look at, let's go to a regular chart. Notice that here's a weekly chart. Let's go to a daily chart so we can really kind of see this with the volume. There's that spike in volume. Now let's think about technical analysis. And again, this is a penny stock, and there's certainly some risk in trading these penny type stocks, but the fact that you had a big volume move that looks like it broke an existing downtrend, I think that is technically very significant, right? We love to see confirmations of large volumes on big breakout moves, and that's certainly what we see. Now, the point that I wanted to show you was the last time Mr. Reed actually bought stock was back in November of 2020, which was around here, which was around 15 cents. And you can see in 3 months' time, this stock was, when is it, a 5-bagger? Full disclosure, I'm following this trade. I think this is a very interesting trade, so I'm going to follow along and see what happens with this trade. So here's our 2 examples of looking at transaction size and putting it in the proper context. All right, so we've looked at a lot of selling. Let's look at some buying trades or actionable trades. So one of the ones that has been in the news of recent, and actually let's go back to our investment page. And, I said that we look at this sentiment that, over the last 60 days, the sentiment among insiders has been, a bit of selling. So what might be more significant is those outliers. In other words, let's look at who's buying during this time when everybody else is selling. And if we go to that, we can see that, on, I think the date was May 30th. Yes, that is May 30th. That in Occidental, we have an American shareholder that purchased 4.6 million shares for a cost of about $270 million. I think we can all agree that that is quite significant in terms of a large transaction. But also what we do see is that this shareholder now controls 221 million shares. Again, I think that is very significant. So let's go to Occidental. I'm going to go to insider trades. And if you're not familiar with this story, this American shareholder is Warren Buffett. And I'm sure a lot of you might be aware of this, that Warren Buffett has been accumulating a large position in Occidental. And you can see that in the month of May, he bought a significant portion of shares. It looks like about 10 million shares. But, he has been adding to his size throughout the year, and even going way back to June and July of last year. So what I see here on this one is in terms of an actionable trade, I notice that the values that Mr. Buffett is buying somewhere between $55 and $58. If we go forward in time, we can see that here's $58. Recently, I think he bought just a few shares above $60. So we know where Mr. Buffett feels that the value of Occidental is somewhere between $55 and $60. So what could be an actual trade here? So let's go to a chart. And so this is a weekly chart, and the box here represents the area of price where Mr. Buffett has purchased shares over the last, we'll say, year. And if you go back in time and you look at some of these spike bottoms, you will see that they will correspond with the days that Buffett was buying stocks. And you can see that many times when he purchases stocks, that the stock does move outside of that area and make a nice move up. So that would be something we could think about. But in terms of technical analysis on this one, what do we see? Well, each of the preceding buying opportunities from Mr. Buffett, the response on the stock is getting much more muted. In other words, what we see is a little bit of a sideways to downtrend on this weekly time frame. So what could I do for this one? Well, I think what would be a more actionable or appropriate trade in terms of, let's say, an options trade is, I know where Mr. Buffett feels that there is value in the stock, and that is somewhere between $58 and $55. So what I might do is look at selling a naked put. In this case, what this might do for me is, if you're not familiar about the option strategy of selling a naked put, here we're selling somebody the right to sell us stock at $55, a value that we believe that Mr. Buffett thinks that Occidental is worth. So let's look at the $55 put. Well, today, the $55 put is, the bid is around 63 cents. And between, if I did the July monthly, which is 30 days to expiration, I'm going to collect, as long as Occidental doesn't go below, let's say $55, which my break even would be $54.37, a value below where we believe Mr. Buffett would probably be buying. I'm going to make 1.2%. Now, maybe that's not a lot of juice for somebody, but you got to think about this in terms of annual return. And so you're going to return, a 14% annual return on this 30 days money's exposed to the market, this 1.2%. Now, that might not be enough meat on the bones, or you want to really go with Mr. Buffett. So maybe what you could do, well, let's think about this in terms of why there's not a lot of meat on this bone first in Occidental. And if we look at the options overview for Occidental, we can see that when we want to sell options or collect premiums, we really want to see the implied volatility at an elevated level. That will tell us that our premiums are bloated, or that there's value in them for us as sellers. And what we can see here is today that our implied volatility on a percentile basis and a rank basis is literally at the lowest value that it's been over the last year. So there's the reason why there's not a lot of meat on this bone is because our implied volatility is low. But low implied volatility means that options are cheap. So we could look at, let's say, a debit spread, a bull call spread. Again, now what we're going to do is we believe that we're going to look at Mr. Buffett is going to buy again, and that it's going to drive price out of that zone. So, let's look at a couple here. I think, let's see, here's like a $55, $61, right? Nice $6 zone, right? A little bit better reward to risk, a little bit higher payoff in terms of the trade. But the question we have to ask ourselves is, if I do a debit spread, this bull call spread, for me to be successful, I need the price to go up. And in terms of the probability of what we saw in the market, looks like more likely the probability that prices for the next 30 days might just go sideways, or maybe even drift a little bit lower. So you have to ask yourself do I want to play a directional trade in this case, or the latter, the naked put trades? Even though there's not a lot of meat on the trade, I'm still going to be profitable on the naked put trade as long as price doesn't fall dramatically. If it goes sideways or goes up, I'm going to still make money. So that, again, that would be up to the traders. Another insider trade that we've been watching, and this one we found, or we've been talking about in our Friday market on close segments for our premium members. For those of you are not familiar with it, for premium members, we do a show in the afternoons, and we look at different trading opportunities. We look at some macro events, some micro events, and one of the trades that we discovered was this insider trading for Southwest Gas. And again, we have a large American shareholder, but this large American shareholder is named. In this case, it's Carl Icahn. Now, if you're not familiar with Carl Icahn, he's known as a corporate raider, but he doesn't like that terminology. He calls himself a shareholder advocate. And Mr. Icahn likes to buy stocks he feels that are undervalued and have the potential of unlocking a lot of value in that stock. Now, it could be, breaking the company apart, or just, directing the board of governors, the board of directors, how to better run their company. And we can see that Mr. Icahn in May bought a significant amount of shares, and he bought them around $57. But we go back a little bit in time, back in March, again, here's where it looks like he started to initiate his position. And we're talking about some very large share transactions in terms of dollars transactions, and also about how many shares he now controls. He now controls about 15% of this company. So how do we use this one as an actionable trade? So let's look at what the stock has been doing. Now, it did fall from the initial transactions that Mr. Icahn took, but since the second wave of buying, we can see that prices have increased. So again, Mr. Icahn and like Mr. Buffett are longer term investment traders, right? They're not in for the short gain. So what we might do on this one is we will follow Mr. Icahn, but maybe we have to have a more realistic time horizon. Now, we could just buy the shares of stock, put them away, and see what happens. But, maybe you don't want to put out that much capital. So what we could do is look at this in terms of an options trade again. And what I might do on this one is, normally what I like to do for options is, if I'm going to buy a call, in this case, I want to go long the stock, I like to buy 70 delta calls because I think you get a little bit better price action from the call. But, if we look at, let's say, a 70 delta, let's say for 1 month out, I got, I might have to pay $3 to $4 for that call. For me to make money, I might need to get a $3 or $4 movement out of the stock. That might not happen in the next 30 days. But maybe over the next quarter, I might get a little bit more price movement. But maybe I don't want to spend $10, or in this case, it looks like $6 or $7 for, a $70 call. What I want to go on the cheap, maybe I want to be a more frugal investor. I could maybe buy, let's say, a $70 call. Now, this would be out of the money, and the theoretical value is about $1.20. Last traded at 130. So let's split the difference. Let's say 125. So I could buy an October $70 call for 125. Now, does that make sense in terms of a trading opportunity? Well, if we look at our chart, and what we see here is, I just drew a Fibonacci line from the recent high to the recent low, and this is probably what Mr. Icahn is looking at. And just a dead cat bounce on this to that 38% retracement puts us around $70. Again, if we think about it in terms of a percentage price movement, that's about a 10% movement between now and October. So I could buy a $70 call for about $1.25, and then what I would do is immediately on up days look for opportunities to sell the same strike, but in a shorter dated call. And here we see the July 21st calls, $70 calls, are trading around 25 cents. So that would lower my cost of my initial investment. And I could do that in Southwest Gas 2 times between now and October. Now, this trade can be a little bit tricky. This is called a calendar spread trade. And if your stock price gets towards your strike price, then you probably want to close the trade out as a spread. What you don't want to happen is to let price go through the strike price. Then you're at risk of an assignment, and then you actually would lose money. But if you exit this trade as, let's say if Southwest tomorrow we woke up and it was trading 10% higher, then you would exit the trade as a spread, and you probably would have maybe a small loss, but most likely just a small gain. But this is a way how we can justify buying out of the money calls and playing that actionable insider information. All right, Gene, I want to
Well,
do
yeah,
a couple
John,
more, but I want to see some
if
questions.
I can ask you something here. This is a common question that I've had a lot of people throw out into the question board. Gerald kind of sums it up very well. Why are some of the insiders identified with their name, such as Carl Icahn, versus Warren Buffett, who's just been identified as American
That's
investor?
a good answer. Do you know that answer? I just think it's the way the filings are done, depending
Right.
on.
That's what I would assume is that, the SEC just, I mean, we get this information, this insider trading information direct from the SEC. So that's just how it comes through. So I thought maybe you knew,
No, I think
you
it's
had a better
exactly like
answer.
you said. I think it's just the way that the filings are done. Again, when we talk about an American investor and we say Warren Buffett, we're really talking about Berkshire Hathaway, right? So the filing might have been on behalf of Berkshire Hathaway, and they name it an American investor, but we're really it's Warren Buffett, right? So um, I think it's more significant that Carl Icahn puts his name on it, and that tells me that he's really, not that Buffett's not using his own money, but he's willing to put his name on the trade. So I think that's one. Anything else, Gene? Before I want to answer a couple of these questions that you sent through to me, so I want to look
Okay.
at them. So Zach asked us, a shoe company had really good earnings and a lot of insiders sold around the all-time high prices. Would you interpret that as a recession defense? And it doesn't seem to show a lot of confidence in the overall company. Again, Zach, I think yes. I think you'd have to look at what did the stock price do after the insiders trade, or what did it do as they are executing these trades? If the market reacts to that as negatively, then that would be more impactful, right? But again, a lot of these corporate insiders, they just sell because it's time for them to sell, or that there is a sequence of events that allows them to sell. So the window of opportunity, right? A lot of corporations limit the time that corporate traders can sell based on, again, things like earnings and stuff like that. So the window might be closed until after the earnings, and then they sell. So let's look at that. I think that's a great question. So here's Chewy. Some of you might be familiar with this stock. I think this is a pet company, a pet delivery company. And what do we see here? Well, again, over the last 12 months, over the last 6 months, over the last 3 months, right? We see a lot of selling in terms of number of shares and in terms of number of units of selling. And what do we see here? Well, in the last go around here, this is June 15th. Well, think about June 15th. It's kind of on the corporate calendar, that could be the end of the corporate cycle, or it could be after, earnings have come out. And what do we see here? Well, we see the C-suite here. We have a sale post exercised. In other words, they were given options, they exercised those options, and immediately sold. Now, normally I would say that that would be a sign of maybe a sign of lack of confidence in the company. Now, again, let's see what happens in terms of, first of all, number of shares versus the shares that they held, right? Significant. Here it's about 20%. Here is about a little bit less than 10%, a little bit more than 10%. Here a little less than 10%, and a little bit more than 10%. So that is kind of significant in terms of, how many shares do these individuals control? Not significant. In terms of transactional value, maybe a little bit more significant. Now, what is interesting about this one is these individuals, right? They sell here on June 15th. We go back into March, again, post-sale exercise, right? March. And then we think on a quarterly basis, right? Here's December again, December 15th. And then when would be the next, right? Maybe quarterly or at the end of their corporate year. Here's June 14th, right? So maybe what we're seeing here is these individuals are selling as the window of their options become available, and they get the options and they sell. Now, what I do see here is that this is a consistent pattern with these folks. And what I might do here is, first of all, see what happens each time and they sell. What does the stock price do? Now, let's go back to 22 in December. Where you can see the stock price was trading around $41. When we go back into March of this year, it was trading around $39, and this year it's around $39. So we do see a consistent pattern in terms of a lot of price value. And, in terms of the timing of the trades, what did stock do afterwards? Well, here's March, it went down. June, we're kind of going down. And then here's December of last year, it went down. So this would be a lot more actionable, right? So this is kind of both a cluster timing pattern based on the window of opportunity these corporate insiders have, and the actionable trade, right? We could do. So maybe we missed the opportunity because this has already happened, and the market has already moved from $40 to $38. Maybe they'll go down, lower, in terms of, we missed out a little bit on the price movement. But I'm sure I'm going to tell you, I put on my calendar, the first week of December, and I'm going to look at this stock and see what is going to be going on with this stock in anticipation that these same corporate individuals, when their December 15th window opens up for them, that there's more highly likely probability that they're going to exercise their options and they're going to sell their options. So I might front run these guys and take advantage of that information. So Zach, great question, and I hope that you appreciate this timely information. All right.
Hey, John, I'm going to jump
Yes.
in one more time because two of our attendees really gave me some great information. So shout out to Jay and to Stan. Back to the question about why is Buffett identified as just an American shareholder. So Stan's telling me that you have to register your name when you own over 10%. And I'm looking at the SEC website, and Stan, you're absolutely correct. So that's why Carl Icahn is showing up. I guess he owns over more than 10%. And Jay's telling me that Buffett got an exemption from the SEC many years ago, not to have to file under his name.
That makes sense because he now owns almost 24% of
Right.
Occidental. So he would have reached that threshold. So it's really about the exemption that he has, right?
Right. So Stan and Jay, thank you. We learn from our users every day. Thanks a lot.
Excellent. Okay, so we're at the top of the hour. I did want to show you one more trade, but maybe we'll save that for another time. So I want to give you some takeaways and some caveats. Again, Barchart's insider trading activity page shows the legal disclosure filings of individuals required by the SEC. And insiders can include our corporate executives, our directors, and our certain shareholders who can control a large percentage of outstanding shares. We just learned. Thank you very much, gentlemen. Insider activity can be used as a secondary piece of information, right? I think that this is important, right? We just don't take trades based on this insider. We need to do our due diligence. We need to find out, our research, right? Look at price action. Look at, what has happened before. What is are these executing trades? Are they having an influence on our stocks? And certainly just taking trade based on solely insider activity is a fool's folly. We're going to look for large transactions. Again, number of shares, a percentage of shares, dollar values. We're going to look for a cluster of individuals who are acting together. That could be a sign of a coordinated effort or insider information that they are aware of that has not been made public yet. Consistent buying or selling over a period of time. I think I showed you a couple of great examples of that as well. And that could be a sign of an accumulation or distribution, in other words, selling. And then finally, not all insider activity is dubious or actionable. I showed you a lot of examples of that, especially if you're going to trade the options that are related to some of these companies. And corporate executives have valid reasons to rebalance their portfolio, just like you and I. So don't just think because some corporate executives are selling, it's, oh, that's the top of the market or there's something bad going on, right? They have the right and they get the opportunity to take profits just like you and I. So be aware of that when you do your due diligence. Okay. So next week, it's not up yet in terms of our webinars. Next week, we're going to do a really interesting webinar on cryptocurrency, and I'm going to have a special guest that's going to help me out with that. So if you're interested in that one, it's called the 5 questions you need to ask before investing in cryptocurrencies. And I think that's going to be an interesting one. The other thing I want to remind you for my Premier members is market on close on Fridays. That's a show that we do. We look at some macro and micro news stories and then look for some tradable opportunities. And Gene, I left this last slide for you. Do you want to talk about this for just a second? I don't want to put you on the spot if you don't want to.
Oh, okay. So we have a new membership plan for all of you who are not currently a Barchart member. We actually have 3 levels of membership. We have a basic My Barchart membership, which is free. And with that, you get some basic tools that you can use to navigate the site, do some charting, find some interesting ideas on many of our popular pages. Our new membership, Barchart Plus, it's a great value for the money, and it adds in a whole set of tools that previously were only available to Premier members. There are some limitations on the things that you can do with Barchart Plus, but it's a great intermediate kind of membership for you. And then finally, we do have Barchart Premier, which is loaded with all of the bells and whistles that we have on the site. If you do anything with options, Barchart Premier is the package that you want to look at. We are adding, actually in the next coming weeks, we're going to be adding some additional things for our options people into Barchart Premier. And with Premier, you also get John's Friday Market on Close sessions. So 3 levels of membership for you to look at. And if you have any questions, please email support@barchart.com. They'll be happy to step you through the differences and answer any questions.
And that brings up another good point, Gene, is that if you have any questions, I know that a lot of folks who sent some questions through today, and I didn't get to a lot of them, and I apologize. Send your questions to support@barchart.com, and our staff there will help answer those questions. And if they can't answer it, they'll send them to me, and we'll get you an answer. So if you feel like you missed out or we didn't answer your question today, please send them to support@barchart.com, and we'll get that taken care of. Gene, thanks for the great explanation there. I know that we're excited about this new tier of membership, and hopefully that folks will take advantage of the trial opportunity. So thanks for your help. I want to wish everybody out there the best of health. Stay safe out there in these volatile times, and the good of all trading.